Imagine being able to predict the direction of the market with confidence. Sound like a dream come true, right? Well, it is not as impossible as you think. By understanding the market structure, you can actually gain a valuable edge in the financial market. And in today's video, I'm going to show you how you can actually incorporate a market structure and also how you can actually make use of the market structure into your own advantage and how you can, and as well, to understand the in-depth of the market structure, not only just the basics, just like what is actually out there, just the high highs and the high lows. So before we get into the video, make sure you subscribe to the YouTube channel and so smash the like button. Now let's get to work, gentlemen. In the normal way that each and every one of us actually understand the market trend, we always understand the market trend that okay, that or market structure, that we have different types of market structure according to the basic market structure that we understand. Number one is the uptrend, that is, if the market is actually going up, and as well the downtrend, right? Now, in our basic knowledge on the market structure, we understand that if a market is actually going up, we expect the market to actually be forming a series of a higher highs, a higher lows, a higher highs, a higher lows, a higher highs, a higher lows, highs, right? This is what we actually understand on the normal basic market structure. That is, the market is going up, it should be forming a series of a higher high, a higher low, a higher, sorry, a higher high, a higher low, a higher highs, a higher lows. And as well, if the market is actually coming down, the market should be forming a series of a higher low, lower low, lower high, lower low, lower high, lower low. But if you actually get into the market or look at the main way that the market actually move, you see that the market does not move easily as this. Sometimes you can pick a low as your new higher low or maybe your new lower low. And meanwhile, that low, it is never a new lower low or it is never a new higher high for you. So how can you actually understand these like your true higher highs and also higher lows? Is very, very crucial if you want to actually understand the real knowledge of the market structure. And as well, before I proceed, if you don't have understanding of the market structure, there is no edge that you're going to build. There is no actually like any edge or maybe like any trading methodology that you're going to build. Everything is going to be built on your market structure. Okay, so now let's proceed. We all understand market structure basically as this: higher highs, higher lows, higher highs, higher lows. If the market is actually going up, higher highs, higher lows. And as well, if the market is actually coming down, we also understand that okay, market is actually forming a lower lows, lower high scenarios up to the downside. Now, in real time, if you actually check your chart, it is never like that in the financial market. It is never as simple, it is never as straightforward as this. Sometimes you have the market breaking a low, and let's say you can have a market breaking this low now, and it still continue, right? You can see the market, sometimes market will break this low, continuously going up, something like that. So are you going to say, okay, this is actually not an uptrend? It's still obviously an uptrend, right? The same way you can actually see the market actually breaking a high and continuously to the downside. So are you going to say, okay, this market is actually not a downtrend, it is still a downtrend? So what actually make this to look like this in the normal real time of the market? That is what we are also going to be talking about today. Now, let me introduce you guys that okay, we have different types of structure. We have what we call the internal structures, and also we have what we call the external structure. All these we are still going to be talking about them today. So, but before we proceed, let me explain what external and internal for you in real time, just a very simple way. Now, if I said external structure, for example, I'm going to be making use of this uptrend. External structure, if you look at here, this is all the direction of the market: uptrend, higher highs, higher lows, higher lows. If you look at this low here, right, this low was what actually formed this high here, right? So in as much this low formed this high here, everything here is considered as external structure because of what it take out this external. So this is an external structure. So whatever thing that form within here, let's say market is coming down, lower lows, lower low, right, lower high, lower lows, all the way to the downside. Everything there, and the market boom proceed to the upside. So everything that happened within here, within this range, it is known as the internal structure. It is known as the internal structure. So you can actually trade based on the internal structure, and also as well, you can also trade based on the external structure if you actually understand what I'm going to be telling you now. Now, your internal structure, right? Your internal structure are what we call the pullback of the market, right? Sometimes it can be called a complicated pullback, or where you can see some people they will be thinking that okay, this is already a break of structure or whatever. So this one can be called what a complicated pullback or pullback, right? According to market cycle, we have what we call the impulse correction, impulse correction. So most correction or most corrective move in the market are all known as the internal structure, and as well you can also trade them as well. Why the real impulsive move, which is the real direction of the market, is can also be known as the external structures of the market. I don't know if I'm making sense, right? Now, let's look at how you can actually mark real structure, or maybe your real higher high, the real higher low, or maybe real lower lows, and also a real lower highs in the market in real time without this basic example. And also, how can you know if a structure have also changed in the market? Okay, and as well how you can also mark a good zone for you to be able to trade from. Now let's look at the example here. Now if you look at the example here, obviously if I should ask that what the market is doing, obviously you guys can say okay, the market is actually going down, because it's obviously that the market is actually going down. But if I ask you to mark the real lower lows and lower highs, can you be able to mark it? Probably some of you will be able to mark it, meanwhile some of you will not be able to mark it. Now let's look at the way you can mark a real lower highs and a lower lows. Let's start with this. Now, if you look at this, and again, mind you, a real lower highs and also lower lows in the market. Like if the market is on a downtrend, a real lower high that the market form, next time market is coming back, they will never take it out, except if that level is a liquidity, in which we are still going to cover in our next class. So now let's look at here. We also see this is a high, right? This high cannot be called a lower high yet, until the last low that the market created. This is the last low that the market created. I don't know if you're getting it. This is the last low that the market created, right? If this high have the capacity to break this low, then automatically we already have a lower high. Then the low that the market actually break will become your new lower low. Okay. Now the same thing as the market pull back, right? If it's a complete pullback, in which is also another thing I have to talk about. But let me just tip something in. So if it's a complete pullback, let's say it retraces up more than 50%, for those of you that is actually using Fibonacci. So if it actually retraces up to like more than 50%, at least it is a complete pullback. So if it retraces up to this level, automatically here is now our new high. Now, mind you, the same way I used to quantify or to know that this level is our new lower high. So if this high that the market form, if it does not break this low, it will never be qualified as a lower high. Now, here also break this level to the downside, which is it break this last low, because this is now the last low that the market form. So immediately break this last low that the market form here, automatically we have a new lower low. You understand? So the same way market push up again, this is the last high that the market push make, and also this new high, we are also going to monitor it. Is it our new higher high, or sorry, our new lower high rather? So now look at what the market did there. Market also push all the way to the downside. It break our last low. Now, market breaking our last low, this is the real low that the market created from here. Now, here is our new lower low. You see the way it's going. So now, market can break anything here, right? In as much it does not break our our last lower high. In as much the market does not break our last lower high, then we are still valid. The trend is still valid. So now we can have this area, lower low. Now we need to find a new lower high. Here is the last high that the market formed. Now, are we going to say here is our new lower high yet? No, until they take out this last low, just like the way we have been doing, until they break this last low before it can be qualified to call that. Now, this is where the market break the last low. You understand? So now the market break the last low, form this low here. But this low, can we say this one is a lower low now? No, because it is incomplete pullback. If I use my Fibonacci, you see that is an incomplete pullback there. It is not up to like 50%. So that is automatically an inducement liquidity for us, in which we're still going to cover later on. So now that you actually have this to this, we automatically have a new lower low here. This lower low it's a complete pullback or a deep pullback. Now, markets push all the way again up to the upside again. And here we have a new lower high again has been formed. Now, according to the way we have been doing it, can we say here is a new lower high yet? No, until the market break the low. Now, this is where the market break the low. You see, now that the market break the low here, so also we are also going to be noticing, did this market have like a deep pullback? No, automatically we can't say here is our new lower low now. Here is going to be our new lower low that the market formed. New lower low has been from here now. So everything that happens here, it's my structure low. From here to here is my swing structure. So everything that is going to be happening here, it's also known as an internal structure. Everything is here can also be termed as an internal structure for me. I don't know if you're getting it. So the same way, everything from here, from this zone, from this swing to this new swing are all my external structure. Now, the same way, the market pull all the way to the upside as well for me here. So immediately market pull all the way to the upside, then we have our new lower high here, right? So we have our new lower high. Now the lower high will never be a valid lower high yet until this last low that the market from here, it also been taken out. I don't know if you are getting it. So here now the market also take it out. Boom, we already have a new lower low here. So you see the way the market is trending, new lower low. Now here, markets also push all the way to the upside. Here, we got inducements here, which I'm still going to tell you guys what actually happened here, but the structure is still intact. Look at it, it's just an inducement. They only weak it out. Just an inducement. Now, after that, what happened? You see, the lower high is still a valid lower high. With that, now does not mean that okay, we already have a break of structure. No, it is never a break of structure yet. Okay, so now here is still a valid lower high for us. Now, here is our new lower high. As markets push all the way to the downside, this is the last lower low that we have or that we witness, the last lower low. So once the markets form the last lower low, we already know that okay, here is our last lower low. Now, the market push all the way to the upside as well, a lower high. So we are looking for a new lower high now. Now market already formed a new lower high for us. So until the market break out from here, before we can confirm that, okay, that our new lower low has happened. Now look at what happened here. The market break to the downside. Now until the market break to the downside, we did not have a tangible pullback yet. Okay, we did not have a tangible pullback yet, or maybe a complete pullback yet. Instead, market just continues selling off all the way to the downside. Now, that is to say, everything here now, anytime market is coming back to this area again, I can still look for an area here to pick a trade from, in which I'm still going to get I'm still going to tell you guys why and how. Now, let's just proceed. If you look at here, market proceed the same thing again. We can continue looking for the same thing. Market use here as a new high. Let's say this is our new high. Now, our new high here cannot become our new higher low because it is not an incomplete pullback. So here it's our new higher low. Now look at here, market also push up from a new lower low, lower high. Now here, can we call it a new lower high yet? No, until they break out the structure. Boom, market break out this new structure, break out this new low here. Immediately market break out this new low, then we already confirm our new lower low. Right? Our new lower low, pushing all the way to the upside again, you see, they didn't take it out. Automatically, we have our new lower high. So then proceed. Here is our new low, or the last lower low that the market formed. Here, the market take it out. So as the market break it from here now, we have a low here for us. Here is our last lower low that the market created. Now, this last low that the market created now, and this is the last lower high that the market created. Market push all the way to the upside, right? And push all the way to the downside, but fail to create a new lower low. So automatically, we're already having a signal of change of structure here, but it is not a complete change of structure yet until the last lower high here has been taken out. But we have started experiencing what we call free transfer of money. right? So we already start experiencing free transfer of money here, in which market can at the end of the day broke through this structure to give us a change of structure to the upside. Now, this is how you can actually mark, or how you can actually know your true lower lows and also your true lower highs, or maybe a true high high. So the same thing applicable for an uptrend. So this, for the sake of this video, I'm just using this one as an example. This sell example for you guys. So you can also have the same thing for an uptrend, the same thing. So what I'm trying to say here is that for you to have a true lower lows, you need to, like, before you can understand the true structures of the market, you need to understand your true lower lows and also a true lower high. And what are those things that you need to look for in order to justify, or in order for you to like actually assume that okay, this is your new, or maybe your true lower high, or maybe your true lower low, are those things that I just mentioned. Your lower low, so your lower high should be able to break a low to form a new lower low, right? And also for you to have a new lower high, it should be able to break the last lower low that was formed. Okay. The same thing for you to have like a high as a new lower high, right? It have to retrace at least up to a premium level of your Fibonacci, right? So some people they call it a level of equilibrium, like more than level of equilibrium for you. So if it should retrace more than level of equilibrium or level of equilibrium, then you can say that is a complete pullback for you. You understand? So those are the things that you can actually put in consideration if you are picking a structure, if you are picking a real-time structures in the market. Lower lows, lower high. Now from this swing here now, from this swing, from this lower high, sorry, from this lower low up to this lower high, you see, let me just give you guys a tip of finance back. From this lower low to this lower high, every structure that happens here, every single thing that actually happens here, everything that happened within here and here is termed as my internal structure. And as well, I can also trade my internal structure on a lower time frame, right? By taking a buy. But me taking a buy from here, I should know where I'm heading to, right? Because I know that, okay, automatically if the market is heading up to my new lower high, in as much the structure has not changed, so there may likely be a possible reversal all the way to the downside, because this is just a correction, right? Internal structure. Okay, now correction impulse. The same thing, I can also trade this internal structure all the way to this level, right? So the same thing like that over and over and over. If you also look at here as well, from here, this is my last, for the sake of this example, this is the last high that was formed before this high, right? I can also trade from this swing low to trade this internal structure, right? By taking a buy. But the buy that I'm actually taking, I should know where I'm actually for the reversal of that buy. This is what we call the internal and also the external structure whenever you are trading. Okay. So this is how you can actually know your internal and also external structure. It is very, very important for you to actually understand your structure. And with this, if you actually apply them very, very well, you are going to see a tremendous change in your trading. A very, very good tremendous change in your trading as well. But how you can actually trade from zone to zone. Okay, I've already explained how you can actually trade from zone to zone by knowing automatically that, okay, this is your last high and also this is your last low. So you can, like, if you're also taking a continuation trade, let me put this, if you're also taking a continuation trade as well, you should know that, okay, if you're taking that sell from here, where are you targeting? You are targeting the last low for them to take out the last low. So what that is for the market to form a new lower low, then you look for a way that the market can actually pull back. Okay, so you understand your true higher highs or your true lower lows, then you can be able to know how to actually trade from one specific zone to another specific zone. So this is just an introduction to technical analysis. And if you don't understand this, there is a you are going to build an edge in the market. There is no strategy that you're going to build. Everything, every single thing, even if you're using indicator, every single thing build on the edge of structure. So make sure you understand the true way you can the true structures in the market. Make sure you actually understand them very well. And mind you, according to what I explained, I said different structure. We can have different time frame. Sorry, different time frame structure is different. Okay, structure is different in different time frame. For example, this in this time frame, I think I'm actually using 1 hour. For example, if I should check this, let me cycle this. And on this 1 hour, it is obvious that we actually on a downtrend. It is obvious that we're actually on a downtrend on this 1 hour time frame because of obviously the market is forming a lower lows to the downside. But this structure, this internal structure that I actually circle, if I should check it on 15-minute time frame, for example, it's going to show that I'm actually on an uptrend, if I'm not mistaken. Let's actually see what I'm actually trying to talk about. It's going to show you that you are in uptrend, but understanding where you are coming from or the major or the external structures, you will know that okay, even though this is showing you an uptrend, this you see obviously it's showing you an uptrend, higher highs, higher lows, right? These lows form a high all the way to the upside like that. So, but even regardless of this 15-minute time frame structure, you should always understand your external structure. You understand? So this is also the way your time frame also have like also contributes to your structures whenever you're actually trading. So now bonus let me just give you guys this bonus. If I'm looking at structures of the market, majorly I do use my 4 hours and 1 hour time frame, sometimes 2 hours, but majorly 4 hours and 1 hour for my external structures. So if I want to look at the extreme external, I can use my daily, in which it is very, very rare on a very equation. I can make use of my daily, maybe um every weekend if I'm doing my weekend analysis to know where we are heading to for the week. So that is how I always do. And once I already have this, once I already have my structure marked out, right, I can use my 1 hour, 20, and 2 hours, the 4 hours as well to mark my structure. So once I already use it to know my external structure, then 15-minute time frame, 5-minute time frame can be my internal structure for my execution, for my early entries of the market. So this is just way that you can actually understand structure. So in our next class, I'm also going to be talking about how you can make use of your inefficiencies in the market and also how you can make use of your liquidities. All those things are very, very important if you actually want to trade conveniently and conveniently. So if you find this information educative enough, make sure you smash the like button, subscribe to the YouTube channel. I'm going to drop a lot of more nuggets on how I used to trade and also what make me to be profitable. And don't forget to don't forget as well to share to your loved ones as well. So have a nice day and bye for now.